Hello, everyone. Thanks for joining the Ocrolus Product Pulse for January. Today, we're excited to share some exciting updates to the Ocrolus platform with Ocrolus Intelligence. A few housekeeping things before we get going. Please use the Q&A box in Zoom. If you have any questions, we'll be happy to address those throughout today's presentation, and we'll save time at the end for Q&A. My name's David Kistler, and I'll be moderating today's call. I'm excited to be joined today by two of our experts here on the Ocrolus team, Lokesh Borkar, who's our senior product manager for small and medium sized business lending, and Patrick Shubert, our head of data science for SMB. Gentlemen, thanks so much for joining.
Thanks, David.
A quick walk of today's agenda. Ocrolus Intelligence brings proprietary network level insights directly into every book with Ocrolus, giving underwriters real world context powered by thousands of SMB loan applications processed through Ocrolus. It helps lenders move beyond isolated cash flow to be able to see borrower behavior in the broader market without leaving their workflow. We'll start with a quick overview of Ocrolus Intelligence, what it is, and how it brings network level insights directly into the underwriting workflow. We'll walk through some of the key features, including loan inquiries, and as well share some high level 2025 data insights drawn from activity across the Ocrolus network. From there, we'll introduce benchmarking, our newest intelligence capability. We'll explain how it works, the types of peer-based insights it delivers, and how underwriters can use it to add context and confidence to the cash flow analysis. Next, we'll show Ocrolus Intelligence in action with a short live demo highlighting some of these insights that are available directly inside each book. No new tools or workflows required. And then finally, we'll wrap up with a Q&A. So with that, let's go ahead and jump in to some of today's content. Pat, would love for you to take us through what we're seeing on the loan inquiry side as it relates to 2025 data.
Sure. Thanks, David. As you mentioned, this is kind of a new feature available both via the API and the dashboard that we provide for every book or application that is uploaded. So the way to think about this, it's new to Ocrolus, but it's a long-standing data element in consumer lending and finance, and something that underwriters have been using in other products for a long time. It's never been possible to the extent that Ocrolus can provide it for SMB. So when we think of inquiries, what we're really telling you is the number of times that we've seen that merchant appear on our network, and we provide it over different time periods. You can see the last 30, 60, 90, all the way out to a year. So in theory, you can kind of reconstruct the presence or the velocity that we are seeing that merchant submit documents to lenders who are making credit decisions, and that get uploaded on our platform. The data point by itself is exciting, but I think what we really wanted to share with the community is the context of what we're seeing in this. So you'll see there on the left, the median number of inquiries in a 1 month period that we see is 7 times, meaning half of all of the merchant entities that we see on the platform every month, half of them will be seen 1 to 7 times and 1 to 7 documents. That could be them revising an application. It could be a broker model where they've applied and been referred out to multiple funders or even capital market providers to make a decision. But it gives you a sense of how wide that that merchant is shopping. And over time, you can see the velocity of perhaps their credit appetite or how they're behaving in terms of seeking credit. And so the key takeaway here is these numbers are a little bit more than we see for consumer credit applications and a consumer product. If you're seeing anywhere from 1 to 7, that's very normal, up to 9 or 10. But you can identify on some merchants when you upload a book, if you're seeing 10, 20, 30, especially if you're seeing that change over time, you can get a sense of, and we believe it's a very good risk differentiator, so you can understand where a merchant's behavior may be changing or where their need for capital may be changing. And what we're calling out on the right-hand side there over 2025, so it's kind of the same distribution, but looking at it every quarter, is it's a very stable metric. When in prior lives when I would create underwriting strategy or be a product or portfolio owner, something that you really need to understand is the stability of the underlying metric and how it's changing over time. And so what we wanted to call out here and kind of share is this is a new data element you can use to understand your merchant's risk, their behavior over time. It's been very stable over 2025. We think that it'll actually become more stable in the future as we have more Encore platform adoption. So we get less things like duplication or replication as merchant applies for credit, and that generates multiple books because the deal's kind of getting shopped out or disseminated. This should just become more and more predictive. And then, of course, as the Ocrolus platform grows, you can think we have a few 100,000 books processed per month. Neighborhood of 100,000 merchants, we're seeing more and more of this behavior. So we think that this is a really exciting new capability, and we're not done here. There's going to be enhancements to it, and there are new things that you can kind of derive analytically from it. But we wanted to provide the context around this new capability.
Yeah, thanks so much, Pat. I think that context is really important. Lokesh, I'm going to toss it to you. So what does loan inquiries look like, and how do you recommend our customers and partners take advantage of it?
Yeah, great question, David. Lenders can access loan inquiry data directly through Ocrolus Intelligence, either in dashboard or via API, depending on how they are set up. What we are doing here is surfacing application history and velocity across Ocrolus network in a way that's immediately usable for underwriting. Instead of having to manually check multiple systems or rely on borrower disclosures, underwriters can see when a merchant was first seen, how recently they have applied, and whether application activity is accelerating all in one place. Uh, that means teams can detect behavior risk earlier and make faster decisions with more confidence without adding extra step to their workflow. And because it's integrated alongside cash flow analytics in our dashboard, it fits naturally into the way underwriters already review an application right now.
And Lokesh, this is available for customers today, right?
Yes, it's already available in the dashboard, also an API for customers right now as we speak.
Awesome. Thanks so much. Pat, I want to pull you back in because loan inquiries is just one side of the coin today. When we think about Ocrolus Intelligence, the other side is benchmarking our capabilities there. What are we seeing in the data and industry performance related to benchmarking?
So benchmarking is fascinating, especially over time. I think it is probably intuitively understood among most portfolio managers or risk managers that the industry can be definitely a powerful segment in understanding how borrower behaviors have changing over time and where there may be risk emerging or where there's opportunity. One of the really exciting things is we added industry this year through a partnership with Middesk. We get a 6-digit NAIC code on the vast majority of the SMB entities that we see that we can look over time. And I think what we're seeing, again, makes a lot of kind of intuitive or anecdotal sense to narratives in 2025 across the credit markets, especially for SMB. Um, so what I'm showing here is I'm using the 2-digit NAIC, and your benchmarking that's available to you actually operates at a higher level of granularity. But for the purpose of discussing it over time, I didn't want, over 100 different industry groups here. We see that revenue grew pretty steadily, but there are some kind of winners and losers a little bit from both the revenue standpoint and the revenue to expense ex debt standpoint. So in revenue, we see professional services and manufacturing did really well, and we see a very expected seasonality in retail and wholesale. But what we're calling out here on the right, and this is the median of these industries. So if you think this is kind of the midpoint of every merchant that we're seeing over the year, based off their bank account and cash flow statements or cash flow analytics information. On the right, looking at a feature that's available in our cash flow analytics is the revenue to expense ex debt. And what we see here is, well, revenue is growing and obviously inflation pressure and different trade dynamics. There are really two at an 2-digit eight group industry classification. Two industries that really won out here: professional, scientific, technical services. You can think of this kind of as them expanding their margin. We also see it in the wholesale trade, and we see accommodation and food services getting squeezed a bit, and that's very, very seasonal. There's kind of a noisy trend there, but it came down through 2025, 11, and 12. So there might be more stress to think there. It might be worth a review. I think where this becomes really powerful, we kind of tend to know over the course of a year the macro story by industry, and it's something that I think underwriting and credit is always aware of. But with Ocrolus uh, we can take any kind of ad hoc request and are happy to work with you. We can understand what it looks across our total network. We now have a very high degree and very high coverage of the industry on these merchants. And so as that's exposed in the dashboard and via API, you can start thinking, okay, I know that this is an industry that there's opportunity in, or I know that this is an industry that may be changing in terms of my risk appetite, but what does the individual merchant look like in context of that industry? And I think Lokesh can show us a little hands-on of what is being what's been made available for books.
Yeah, absolutely. Pat, no, I think that's really great context to have as we think about sort of the macro view at the industry level from the Ocrolus network and the data points we have available. Lokesh, obviously, the folks that join this call want to know what this means for them when they're evaluating, a particular merchant. So let's talk about benchmarking and what that looks like within Ocrolus.
Absolutely, David. So what Patrick just walked through is actually new to SMB lending industry. Historically, benchmarking like this simply hasn't existed in the industry, especially in SMB underwriting, and underwriters were left interpreting raw numbers in isolation. With benchmarking in Oculus dashboard, we are introducing something that hasn't really been accessible to SMB underwriters, which is real peer-to-peer context at the moment of decisioning. This peer context is instantaneous, and underwriters can see how a business compares to similar merchants in the same industry using real anonymized SMB data. Because the insights are percentile based, it's immediately clear whether revenue, expenses, lending activities are above or below industry norms. And most importantly, it's seamlessly integrated into our Oculus dashboard so that it becomes part of standard underwriting workflow and is not a separate research step.
That's awesome. Thanks so much, Lokesh. Folks, I know we've been talking about these things conceptually and some of the use cases and the data that's feeding it. Lokesh, why don't we jump into the product and let's show folks what this looks like?
Sure, absolutely. I'll share my screen.
And Lokesh, while you're getting the screen pulled up, folks, we did have a question come through the chat. Um, the question is, if I want to change a merchant's industry categorization, can I do that? Well, good news, we're about to walk through that exact example here in the demo. So Lokesh, take it away.
Let me show you what it looks like in demo book. We can see both the products under Oculus Intelligence tab in the book. I'll start off with loan inquiries. So for this, here, basically, an underwriter can immediately see when this merchant was first seen, right? Which can be looked at as a vintage in lending activity, how recently they have applied, and also see how application activity is trending over time, right? The velocity view makes it easier to spot changes. For example, you can see a clear spike around August. If you scroll through it, you'll see that there are 3 applications every month, and you'll see a spike around August. What you'll also notice is that there's a similar sort of spike happening in January. So the spike in August actually, what it indicates is that the merchant was aggressively seeking credit during that particular period, and the similar buildup in January right now which indicates that merchant behavior is similar to the prior spike in August, right? So you can actually compare the transactions present in January and see what happened and sort of expand into what sort of behavior you can see throughout that particular merchant's activity in coming months of September, October, right? Also, it helps teams understand whether this is a one-off event, a recurring behavior, or the start of another grade seeking cycle. And if I want to add more context into it, I can drill into individual inquiries to see the timestamps of it, the dates of it, and other things. So you get both the high level pattern and the underlying details, which is what underwriters need to access and to basically assess behavioral risk. With that behavioral context in place, I'll quickly move into benchmarking as well, which helps add industry context to financials. So I'll go back to the overview page and s- I'll pretend that I'm underwriting this particular merchant, right? So I'm looking at about $43,000 worth of revenue and 25,000 worth of expenses. On its own, I'm not really sure is this a good or bad type of business. It's a bit of gray area to be very honest right now. Let's go to under Oculus Intelligence and try to get more context around these numbers. Now, if you'll notice that this particular merchant lies at 5%, like less than 5%, right? And it's an immediate indicator that something is off about this merchant. The merchant is coffee shop, but it's mapped to actually groceries and retail related product merchant wholesalers, which is incorrect. So let me fix that. I'll quickly go back to overview page and I can set this back to its correct NICS code. So now that NICS code is in place, I can quickly go back to the Oculus Intelligence tab and we now have the correct benchmarking results available. Right now, what I see is looking at the revenue, I can see that this merchant is around 82nd percentile compared to similar restaurants. That tells me that revenue is relatively stronger to its peers. At first glance, that this merchant looks pretty good from an underwriting perspective right now. But I can't just look at revenue per month. I also need to look at its expenses. I can quickly go here and change the metric that we are benchmarking to average expenses per month. Now, you will see that the expenses are also quite high relative to its peers. It lies at around 85 percentile. So what this tells me is that this isn't an unusually strong business, which was my assumption when I saw revenue being benchmarked. And it's an fairly normal business. The only nuance is here high revenue is also paired with higher costs. With peer context, I can see this business more clearly, which is high revenue but also high expenses, which gives me a much more better balanced and realistic underwriting view. This is exactly how benchmarking helps underwriters, not only by giving a single answer, but by helping them validate their hypotheses and assumptions and add more confidence to their decisions. David, back to you. If you have any questions, happy to answer.
Yeah, awesome. Thanks so much, Lokesh. Folks, please use the Q&A feature. Just a quick recap here. Ocrolus Intelligence, some really exciting, contextual data to help you, with inquiries and benchmarking, thinking about behavioral understanding, as well as thinking about the industry categories. If you have any questions, please use that Q&A feature to drop those in. Let me check here and see what we've got. We do have um, a couple of questions. Pat, I'm going to go to you first. You mentioned talking about working with partners. What options exist for customers and partners of Ocrolus who want a deeper kind of custom analysis beyond, what's available in the dashboard? Is that something that we can help with?
Yeah, especially where we're seeking to understand things in context of the wider network or over time. Um, we are happy to partner, obviously. And I'd say probably talk to your account manager or executive. We do examples where we'll run historical categories. We can do it by geography, Fed district, state. We can aggregate just your books and show that against kind of anonymized total aggregate. We even do activities where you can share historical loan performance. To get a concept of like good, bad, and we can say which features are most highly correlated in your portfolio. Like maybe you should be using this data element from cash flow analytics because it shows really good separation and differentiation to default or renewal or whatever you're looking for. So I think it talk to your account partner. Anything in context of our features, both small or in aggregate across the whole network. We can do one-off studies. Sometimes it's as simple as us just pulling some data that we're already looking at. We can do that really quick. If it's a really tailored, customized activity, we can think about and structure something so we can share data in two ways and hopefully provide that insight and value.
Awesome. Thanks so much, Pat. We do have a couple of questions that have come through. One is, where is the inquiry data pulled from? Is this based on the number of book IDs created for the merchant name? This is from Andrew.
Yep, great question. So today, the very first step is the way to think about inquiries is when we get a book, we have our own machine learning and recognition, NER and things running that will say based off the bank account. So these are very strong matches. We're more likely to miss a match than we are to make a bad match. We look at the bank account information, bank account number. We do some semantic comparison. We resolve that entity. They get a unique key in our system. And so what inquiry is really showing you is if we look at the book and we look at that SMB entity that we've resolved, how many times have we seen a book that belongs to that entity over the time window that you're looking at? So it's not deduplicated, right? If that merchant goes to 5 different Ocrolus clients and those clients all submit books, you're going to see 5 in the 1 month. Where this is going in the very near future is something that the kind of the credit bureaus do. So if you've ever been a portfolio manager on the consumer finance side, you'll know for many products, mortgage, auto, they deduplicate that by time with a shopping window. And that's probably the next step of this. So we want to get this feature out there. You can see how many books are resolving to that entity over a period of time. And in the future, by all means, give us feedback on it or how you think it might be useful if we're able to kind of distill it a little bit. But the direction that this is probably going is very similar to a credit bureaus. And to call out where is it coming from, at the root of it, it is coming from Ocrolus's processing network. So there's no external information provided here. And we would never share specifically which entity submitted that book. What we're telling you is we're seeing hundreds of thousands of books per month, 100,000 merchants or so. How many times are they showing up on the platform?
Yeah, so the power of the network level insights there. That's awesome,
Mhm.
Pat. Another one here, and Lokesh, I'm gonna have you speak to this one. Can this be tailored to reflect geolocation today?
Yes. So as we speak, we are currently researching on how we sort of divide the data or cut through sections of it so that we maintain the parity of data availability as well as the geographic sections available. So we have to ensure that the data makes sense when we cut it across states or across metropolitan areas. So we are currently researching on it, and it should be available in the same Oculus Intelligence tab very soon.
Awesome.
As well
Well,
as over time. So kind of what I was sharing when we looked at over the year, it's great to know where they stand within their peer group. Another step of that is where are they within their peer group in their local market, whether that's we'll have to look at sample sizes and see if it makes sense by an MSA or state or Fed district. But we also want to show that over time so you can see, are they becoming stronger relative to their peer groups in that geo, or are they facing challenges?
yeah, that's a great call out, Pat. None of this is meant to be static. This is meant to be living, breathing. As we see things change over time, then obviously the data is reflective of that, and then how we, help folks visualize that as well. Folks, we hope to keep these sessions quick and short and effective. We hope you've joined today to learn a little bit more about Ocrolus Intelligence, how you can use these features and the functionality behind them to drive better decisions within your organizations. Lokesh, Patrick, thank you so much for your time. If you have any additional questions, please feel free to reach out to us. We will be sharing the recording of today's session here over the next day or so. Thanks so much, folks. Have a great day.